Welcome to the Pro Tickers Deep Dive, your go-to breakdown of the stock movers and major stories at the close of global trading. Let's dive into today's market action. So, Friday kicked off really quite positively, didn't it?
It did, a real surge of optimism in the markets.
Yes, some key corporate news really seemed to, well, light a fire under several major stocks. It wrapped up the week with, I'd say, a surprisingly upbeat investor mood.
Definitely surprising given some of the background noise.
Exactly. So today we're aiming to cut through that noise, bring you the critical insights from key earnings and sector moves.
Your express lane sort of to understanding what's really driving things today.
Precisely.
Okay.
Okay, let's unpack this. Kicking things off, maybe in the sportswear sector.
Good place to start.
Shares of a leading company there, well, they surged almost 10% in early trading,
10%, wow.
signaling what looks like maybe a definitive end to that year-long sales slunk they've been in. That's a significant bounce.
It really is, and what's truly fascinating here, I think, is the strategy behind that bounce.
Right, the why.
Yeah. The new CEO emphasized a clear path to recovery. Now, okay, a sales dip is still forecast for the current quarter, but it's expected to be far less severe than they initially projected.
Managing expectations a bit.
A bit, yes. But here's where it gets really interesting for you listening. The company is also implementing measures to offset around $1 billion in tariff-related expenses.
$1 billion.
By raising prices and scaling back manufacturing in certain regions.
So this isn't just about their bottom line then?
No, not at all. It's a critical stress test, really, for global supply chains. It kind of signals a broader industry trend, maybe towards more regionalized production.
Interesting. It shows how companies are trying to be proactive, address these external pressures.
Exactly.
And you mentioned a ripple effect. That positive outlook certainly lifted the broader global sports apparel sector.
It really did.
We saw a rival brand up, what, 1.5%? A sporting goods retailer climbing 2.2%?
European peers, too.
Yeah, European peers gaining around 4%. And even a major UK retailer surged 7%.
That's quite a wave.
It is. And all this contributed to broader gains in equity futures, just adding to that overall market optimism. That's a strong ripple effect.
It really shows that interconnectedness. Okay, so does this kind of positive consumer-linked sentiment translate elsewhere, like, say, tech?
Good question. Let's pivot there.
Well, moving to technology, one of the largest e-commerce and cloud companies, for instance, rose a solid 1% in early trade.
Okay, 1%. And that was after an analyst upgrade.
That's right. A pretty significant analyst upgrade.
Interesting trend, certainly boosting the sentiment there. What's the thinking behind that upgrade? They see the firm as, what, a top candidate to consistently beat earnings?
Essentially, yes. The firm is now seen as one of the top candidates among major tech players to consistently meet or even exceed earnings expectations right through the end of the decade.
Wow, that's a bold claim. For you listening, what's underpinning that? What fundamental shifts are analysts seeing?
Well, it seems it's not just a temporary bump. It reflects a kind of fundamental re-rating of their long-term growth prospects.
In which areas specifically?
Particularly in cloud services and their e-commerce segments. Both just continue to show really robust expansion and, importantly, profitability.
Right. And that uplift helped push the tech-heavy indexes.
Exactly. Push them towards yet another record high. It just continues this week's bullish momentum, you know?
Yeah, highlights where some of that perceived deep value is right now.
Definitely.
And speaking of tech giants and momentum, a top-performing chip maker, it just kept climbing, didn't it?
It did. Add another 0.5% in early trading today.
And this follows that incredible multi-month rally. It's up, what, 64% since the April lows?
An amazing run. Just incredible.
So what makes this rally feel maybe different? Why does that huge $4 trillion target seem, well, possible?
A historic benchmark is definitely on the horizon there. Look, this isn't just a big number for the sake of it. This $4 trillion trajectory for the chip maker, it really underscores the foundational importance of advanced hardware in this current tech cycle.
Especially with AI growth.
Especially with the explosive growth in AI, exactly. As of yesterday's close, its valuation stood at $3.78 trillion. That actually puts it ahead of other tech giants, you know, in that race for global market leadership.
So it's telling you, the listener, that perhaps the real value creation is shifting, maybe from software and platforms to The underlying infrastructure?
That's certainly a key interpretation, the hardware that powers everything.
Okay, so let's try and connect this to the bigger picture for everyone listening.
Right. So if we pull back, today's deep dive seems to reveal that, despite those macro headwinds we always talk about, interest rates, global trade uncertainties,
Hmm.
focused corporate strategies like we saw in sportswear, and just this undeniable demand for cutting-edge tech, like with the chip maker, they're carving out some strong opportunities.
So momentum seems strong despite the worries.
It appears surprisingly strong, yes, with positive earnings filtering through these sector-wide gains and a pretty robust investor enthusiasm today.
So the key takeaway might be resilience.
I think so. Keep an eye on companies that are proactively addressing these external pressures, because that resilience, that's likely what will define the market leaders going forward.
Makes sense. You want to stay tuned for further updates as earnings season continues and investor sentiment evolves. Thanks for listening, and we'll see you next time on the Pro Tickers Deep Dive. Stay sharp and stay informed.